Assalamualaikum. My name is Nur Aisha binti Izzuddin, and I'm going to talk about powers vested in the DG in investigation.
Firstly, power to call for specific returns and production of books. It is Section 78. The DG has power to call for specific return which the taxpayer must complete and deliver within 30 days from the date of service of the notice, to attend personally before the DG and produce for examination all books, accounts, returns, and other documents deemed necessary. Secondly, power to call for statement of bank accounts, which is Section 79. The DG has power to call for all bank accounts which in the name of taxpayer, taxpayer's wife, dependent child, or jointly in any such names in which he is or has been interested jointly or solely, and also in which he has or has had power to operate jointly or solely. The DG also has power to call for all savings and loan accounts, deposits, building society accounts, and cooperative society accounts in regard to which he has or has had any interest or power to operate solely or jointly during the period of investigations. And then the DG also has power to call for all assets which he and any wife or dependent child possess or have possessed during the period of investigations. The DG has power to call for all his sources of gross income and all facts bearing upon his present or past chargeability to tax. The declaration of assets also include assets situated overseas, which would include landed property, shares, deposits in foreign bank, etc. A taxpayer must furnish the required statements within 30 days from the date of the notice. Thirdly, Section 80, which is power to access and search. The DG has the power to enter and search all lands, premises, places, and to gain access to all books, documents, objects, articles, materials, and things. These have to be accompanied by search warrants. The DG may take possession, make copies, or extracts of any books or documents without any payment. Other than that is Section 81. It is power to call for information. The DG has the power to call for information or particulars from any person through the issue of a notice in writing where it is required to be furnished within a specified time. Lastly, Section 140. It is power to disregard certain transactions. In the event certain transactions are believed to have direct or indirect effect of altering the incidence of tax, relieving any person from any liability to pay tax or to make a return, evading or avoiding any duty or liability under the Act, or hindering or preventing the operation of the Act in any respect. The DG has the power to disregard or vary the transaction and make adjustments as he thinks fit to counteract the effects of such transactions.
What is the period of investigation?
Period of investigation. In general, the examination and review of a taxpayer's tax affairs would cover a period of 5 years under Section 91, subsection 1. Thus, an investigation opened in 2012 would invariably cover a period of 5 years, such as from YA 2007 to YA 2011. The tax authorities can raise an assessment or additional assessment within 5 years from the relevant YA by virtue of Section 91 of the Act. However, in the case of fraud, there is no time limit. Investigation and review of assessment for any period can be re-examined under Section 91, subsection 3. Willful evasion. What is willful evasion? Willful evasion of tax means any action or deed deliberately performed or done with the purpose or intention of evading or assisting any other person to evade tax and without necessarily. There are 6 willful evasions, which consist of omitting income from a return, making a false statement or false entry in a return, giving a false answer orally or in writing, preparing, maintaining, or authorizing the preparation of false accounts, falsifying or authorizing the falsification of accounts, and lastly, making use or authorizing the use of any fraud, artifice, or contrivance. Lastly, I'm going to explain about the offenses and penalties. The penalties will be divided into 2 sections, which are penalty without prosecution and penalty with prosecution. Firstly is failure to submit return. For without prosecution, where a taxpayer has defaulted in submitting a return or in giving a notice to the DG of his chargeability without any reasonable excuse, and where no prosecution has been instituted, the DG may under Section 112, subsection 3 require the defaulter to pay a penalty equal to 3 times the amount of tax payable before any set-off, repayment, or relief. While with prosecution, where there is prosecution and upon conviction, the taxpayer who defaulted in submitting return for 1 year assessment is liable for a fine between 200 ringgit to 20,000 ringgit or imprisonment of 6 months or both under Section 112, subsection 1. For a taxpayer who defaulted in submitting return for 2 or more year assessments, a fine between 1,000 to 20,000 or imprisonment of 6 months or both, and a special penalty of treble tax undercharge may be instituted under Section 112, subsection 1A. The second offence is failure to inform chargeability. For penalty without prosecution, the defaulter also required to pay a penalty equal to 3 times the amount of tax payable before any set-off, repayment, or relief. While penalty with prosecution, the defaulter have to pay fine between 200 ringgit to 20,000 ringgit or imprisonment of 6 months or both. The third offence will be on incorrect return or information. For penalty without prosecution, where no prosecution has been instituted under Section 113, the DG may under Section 113 subsection 2 require the defaulter to pay a penalty equal to the amount of tax which has been undercharged arise from of the incorrect return. While penalty with prosecution, if the DG found that a taxpayer has committed an offence under Section 113, such as making incorrect return or gives incorrect information upon conviction, the defaulter is liable under Section 113 subsection 1 to a fine between 1,000 to 10,000 and special penalty of double the amount of tax which had been undercharged. The fourth one will be on duty to keep records and entries within 60 days under Section 82 subsection 1 and subsection 6. There is no penalty without prosecution, and penalty for with prosecution, the defaulter will be liable to pay fine between 300 to 10,000 ringgit or imprisonment of 1 year or both. The fifth offence is willful evasion of tax under Section 114. Where there has been willful evasion under Section 114, upon conviction, the defaulter will be liable to a fine between 1,000 to 20,000 or to an imprisonment of up to 3 years or both. The defaulter will also be required to pay a special penalty of 3 times the amount of tax which has been undercharged. Sixth offence is written by employer under sections 83, subsection 1, 2, and 3. There is no penalty without prosecution, so the penalty with prosecution, the defaulter will be liable to a fine of not less than 200 ringgit and not more than 2,000 ringgit, or to imprisonment for a term not exceeding 6 months, or to both. The seventh offence will be on payment of tax for company taxation. For penalty without prosecution, a 10% penalty will be imposed to the amount, and also additional of 5% if the defaulter unable to pay after 60 days. While penalty with prosecution, civil proceedings for recovery of tax due may be instituted. The last offence is payment of tax for scheduler tax deduction system. There will be no penalty without prosecution, so penalty with prosecution, the defaulter will be liable to pay fine more than 1,000 or imprisonment of 6 months or under 6 months, or both.